And yes, you were right. If you look at the spot rates, which are the short-term rates, they have been at unprecedented levels. And we would also hope that they're starting to come down in the upcoming couple of months. Having said that, demand is still very strong. And right now it's difficult to provide the capacity that's needed. So I do expect that that price for that last box will remain high. And that's, of course, where also shippers and carriers should work together and see what can we do to create some more longer-term stability.
I think what is kind of interesting about the situation that everybody seemed to be surprised about these bottlenecks for all kind of products. So what actually happened and when did it start?
It sort of started in Q3, Q4 last year because everybody predicted that the trade would be very slow throughout 2020. But then we saw demand coming back very strong in Q3, Q4. And of course, then, despite the fact that everybody tried to do everything to make as much capacity available as possible, demand was simply stronger than expected. And because of that, there were not enough ships and not enough boxes available to carry all the goods. And then, of course, you see rates going up.
And why does it last so long? I mean, if you say it's not a problem that the products are not there, the problem is that the products cannot be shipped to the places where they're needed, right?
They are, but what you see is that because there is so much stress on the supply chain, it's also difficult to carry much more goods than we did a couple of years ago. I mean, a simple example, if you look at a service between Asia and the US, normally you would need, say, 6 ships or so to have a weekly service. Today, you would need 8 because you are waiting so long before you can get into the ports. And then, of course, that consumes a lot of capacity, and that means that effectively the number of boxes that's being moved every week is actually not that high. And there's been so much stimulus also put into the economy, not only in the US, but also in Europe. And despite the fact that people are moving spending from, say, events and restaurants to consumer goods, there's still a lot of savings as well. So the likelihood that this will continue for a while is certainly also fairly high.
Are you predicting that this is going to last well into next year, so that these supply chain disruptions and bottlenecks will something which the industry actually has to get used to?
Good question, and I think one thing we've learned over the last 18 months is that it's incredibly difficult to make these type of predictions. But if you try to look at the fundamentals, then I think it's probably going to remain tight for some more quarters.
What do you think, will that also have a lasting effect on inflation? Because currently we are still thinking that this is like a temporary spike, especially in countries like Germany. But if I'm listening to you, it could actually last a little bit longer, right?
You certainly see inflationary pressure in many places around the world. So I do think inflation is going to go up. How much that is going to be, I think that remains difficult to be, that remains to be seen. When you look at prices today, they are certainly at extraordinary levels, not only when you look at container prices, but also if you want to charter a ship, that is 5-10 times more expensive than it was 1 or 1.5 years ago. And of course, fuel has also gone up. So there's a lot of pressure on cost, and we need to see how much of that is going to normalize once the market stabilize again, which, as we said, could still take well into 22.